MCO, MCO 2.0, 3.0, CMCO, EMCO, RMCO. Pening kepalaku. Those MCO probably made up most of Malaysia's memory for 2021. During this period, most of us were stuck at home and the economy came to a standstill. But it's probably right to say that all of us were quite entertained as well with all the things that were going on in the country. Hi, I'm Frankie. Welcome back to my fuck show. It's the end of 2021. Let's recap what happened. Any lessons we could learn from them to be carried forward into the new year and make us more money.
Show me the money!
Started on 18th of March 2020, it has been 1 year and 9 months of lockdowns. In the beginning of 2021, many of us were hopeful that this year would be the year of recovery after being stuck at home for so long. But that hope faded away quickly as the government was unable to effectively control the spread of the COVID-19 virus despite closing all borders to foreign travellers to Malaysia. Well, partly it's because people didn't follow SOP also lah.
And you just duduk situ melihat.
But anyways, you will get my point because what I'm trying to say is that while most of us were stuck at home, the whole political scene was like a Netflix drama. From the suspension of parliament to the power tussle between political parties. At the climax of the drama, Tan Sri Muhyiddin had to step down as the shortest serving Prime Minister in Malaysia history. Chair also Helen Satwom already needed to get up for the next candidate. The collapse of Muhyiddin was much attributed to the inadequacy in managing the COVID-19 pandemic, which angered the people. Well, on the other hand, it's also because Tan Sri Muhyiddin didn't help Zahid and Najib in their graft court cases, despite their support for him. Maybe he forgot that Malaysian saying, I scratch your back, you? In the past, investors like to put money in Malaysia because it is one of the most steady countries in the region with decent growth. It was so steady because we had the same Prime Minister for 23 years. Well, longer than that because he came back after that for a while. All I want to say is that there are no more such things in the future. For investors, if you want to invest money in Malaysia from now on, the dynamics of the Malaysian politics scenes will be exciting at least until the next general election. That means investing in Malaysia has gone from this
Oh my goodness, McGregor, look! In here, Geo Francis!
to this.
You okay, lady?
Think on the bright side. Exciting means volatile. More volatile means more opportunities to do short-term trades to make quick money, man. For businesses, they had no time to entertain those clowns in 2021. The bigger problem that haunted them was the perfect storm of supply chain disruption. First of all, largely due to the pandemic, shipping rates started going through the roofs. Costs to transport raw materials and finished goods became more expensive than ever. Secondly, the many versions of MCOs limited the number of foreign workers that could enter the country, causing a shortage of labour. On top of that, many countries were beginning to reopen their economies in 2021. That itself contributed to a sudden surge in demand that many factories couldn't cope with, which compounded the situation that most businesses face. Today, if they are still surviving after all these challenges, they will still be confronted with intense pressure on costs such as higher energy costs, rising raw material prices, a weak ringgit, and so on and so forth. This daunting reality is going to challenge the cash flow in the upcoming months. People say it's survival of the fittest. As investors, this is the time for us to see for ourselves which companies could truly withstand the challenges ahead and survive at the end of the day. For public listed companies, they still have one lifeline.
You didn't need those stinking lifelines, did you?
Bursa Malaysia has announced that the relaxation of fundraising rules will be extended by another 12 months. That is until the end of 2022. This means that companies that are facing cash flow problems can do private placements to raise funds with lesser red tapes. Chances are, companies that don't need cash may also come out to do the same to reap the opportunities of ample market liquidity. I bet most of you forgot what the rules are relaxed by Bursa Malaysia already, right? Let me give you a recap.
Yeah.
It's rewind time.
On the backdrop of the pandemic, Bursa increased the general mandate for private placements to 20% of a company's issued share capital from 10% previously to address the need of companies to resume operations and raise funds quickly and efficiently. Companies are also allowed to issue up to 30% of their existing share capital in a placement if their shareholders approve the exercise in an EGM. Thanks to retail investors who have been a net buyer throughout 2021, you guys have been the main supporters to these fundraising activities.
You're all breathtaking.
Apart from NCO, ESG was the other three-letter words that we will remember about 2021. Today, we all know that global warming is real, and we had a taste of what it meant in the recent 48 hours of non-stop downpour that caused a serious flash floods in parts of Selangor and Pahang.
Kerajaan di mana?
Around the world, regulators and investors are taking hits,
not trying to find the next place to go and live.
and efforts are accelerating on the environmental, social, and governance front to avert the worst of climate change. Apparently, the UN Environmental Programme said that the world needs a 7.6% reduction in CO2 emission per year for the next 10 years to limit global warming temperatures. To put that into perspective, it's like saying all of us have to start taking public transport for at least a month every year for 10 years to save the world. That means by the end of the 10th year, the whole world will be travelling mostly on public transport. I can smell how clean the air would be by just imagine that.
The flavors are melting on my tongue.
Malaysia is currently conducting its own feasibility study on imposing carbon tax. If the study finds that the benefit of taxing businesses on producing excessive CO2 is more than the cost of doing it, the government will probably not to do it until the end of GE15. Of course lah, later implemented already lose votes and end up losing power in the parliament again, how? If I were to recall the one thing that I used the most during the lockdowns, it was definitely Grab. Breakfast Grab, lunch Grab, dinner Grab, no more milk Grab, need condom Grab. Grab was founded by Malaysians to solve the Malaysian taxi problem via the My Taxi app. But today it has grown to be more than just a hailing app, headquartered in Singapore and listed on Nasdaq in the US. If there's any lesson to learn here, it would be that we would continue to lose our best talents and companies if there are no comprehensive and concerted effort to keep them in this country. It is said that at one point, Khazanah actually rejected Grab and invested in Uber instead. Ironically, Uber didn't do well in this region and sold its business to Grab in exchange for a 27.5% stake in the company. So funny, right? Every time say support local, but letting this golden egg-laying goose run loose to the neighbor's house. While Khazanah did not appreciate Grab, the company managed to attract world-class investors such as SoftBank, Toyota, Honda, HSBC, Macquarie, and many more. Anyways, kudos to the Grab team. If they didn't make the move down south to ASEAN financial hub, perhaps they will be stuck with Khazanah and not be known to so many other world-class investors. If you want to invest in this Malaysian origin super app company today, I'm sorry, you need to open a US trading account to begin with and convert some ringgit into US dollar first. What to do? Have to pay US dollar to buy Buatan Malaysia lor.
Ironic.
Lastly, to sum up 2021, it was the year of collapse for glove stocks, while the tech sector, generally speaking, went to the moon. For glove stocks, since reaching their all-time high in August 2020, share prices have been on a decline, and so far, sad to say that they haven't seen daylight. This was due to a number of factors. One of it was the ramp-up vaccination drive that hurt the general sentiment on the market for gloves. Then, there was also falling of the average selling prices of gloves, which impacted the profitability of glove manufacturers. Those who were quick to respond to market trends and news quickly shifted their funds into tech sector. 5G, AI, EV, those were the big words that excite the market in 2021 and continue to drive the demand for tech. As a result, the world ran into a shortage of chips. This situation fueled the tech rally everywhere from Taiwan in the east to the US in the west. They say that what goes around comes around. 2021 was a year where we saw a boom in tech stocks while most of the other sectors were performing quite badly due to the pandemic. Will 2022 be a year of 180-degree shift in terms of market outlook as we are starting to live with the virus? More importantly, are we ready for GE15 in 2022? Because that itself is a huge implication to the stock market. Only time will tell. That's all we have for today. #FUCK